It seems like you don't need to build a tech company to become world's richest person. All you have to do is sell overpriced handbags to people who make a lot of money but are still dumb enough to waste all that money on overpriced handbags with a logo that literally says, "I have paid $5,000 for this handbag that literally performs the exact same job that any other handbag does. That cost $10. But you can't call them dumb because they're making so much money. But they could be dumb because they're wasting that money on dumb things. So I will leave that question for you to answer in the comment section. I did not mean to offend anyone. I just can't understand why anyone would pay $5,000 or $10,000 for a handbag. Maybe I'm just not smart enough to understand that. Let's get back to the question of this video. How much money do you need to retire? Let's just be realistic. $10 million? $100 million? $1 billion? The answer is far from that. In order to answer that question, we have to take a look at a few statistics. In 2019, right before the pandemic, the Bureau of Labor Statistics said that the median personal income is $36,000 or $61,000 for households. But let's ignore the median and focus on the average household income, which is $88,000. Of course, this number is not accurate for everyone because if you are in your 20s, you need far less money compared to someone who is in their 60s who needs to pay a fortune on insurance because with age comes health problems. That's why if you want to save money, take care of your health and stop eating all that junk food. The next question is, how much do you need to invest in order to earn $87,864 every single year without doing anything? We're going to take a look at a few available options and we will do the math. If that number is higher or lower for you, you can just take that equation and use a different number that suits your circumstances more accurately. Don't be scared of the numbers we'll talk about because at the end of the video, it will all make sense. That's why it's important to pay attention. I get it, it's not easy. After watching 15 seconds TikTok videos, watching a 10-minute YouTube video seems like a 3-hour movie. But I promise, the value you will get from this video is far more than you will get from browsing TikTok for hours. Have you heard the phrase, never spend the principal, only spend the interest? And that's the key to financial freedom. If you have inherited $10 million, let's say you invested and get a 5% interest annually, that's $500,000 a year. For the rest of your life, you could constantly spend $500,000 or $41,606 every single month for the rest of your life, and your wealth won't even decrease by a single penny. That's way better than splashing $10 million in one single night. But the key question is, since the average household income is $87,864, how much do you need to invest to make that much money every single year? For the sake of this example, we're not going to take any risky investments such as crypto or individual stocks such as Tesla or GameStop. We are going to be ultra conservative and take something super stable, something that historically has proven to grow by a decent percent, like the S&P 500 that grows by around 10% a year. 10% out of $878,640 is $87,864, the amount we are looking for. This means if you manage to invest $878,000 for the rest of your life, you can spend $87,000 and your wealth will remain the same. But the problem is that, how do you save $878,640 when the average household income is $88,000? That's literally saving every single penny you earn for 10 straight years, which is impossible for most people. And that's the average, which means most people who are in their 20s do not make anything close to that. And that's where the magic of compound interest comes into the picture. Let's say you are 21 years old, you're about to graduate and looking for a job, but luckily you have saved $1,000. Whether you partied less, avoided cool Starbucks coffees, or you were single during your college days. That's one of the benefits of being single. But is it worth it? Anyways, let's assume you will invest that amount into the S&P 500 and completely forget about it. You're not going to withdraw it the next September when the new iPhone comes up or when you have no money left to hang out with your friends. You will live as if you have never had that money in the first place. And every single year till the time you retire, you commit to invest $1,000 into the S&P 500. When you retire at 66, you will end up with $863,685 or $86,368 every single year. By saving just $1,000 a year, you have built wealth that's worth almost $1 million and generates $86,000 a year. That's why Einstein once said, "Compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it." I know that waiting for 45 years sounds like a really long time, but we also took a very small amount of money. Saving $1,000 is not a big deal for most of the people who are watching this video. We can take a more extreme example where you could save $3,000 or $5,000 and you won't have to wait for 45 years to reap the rewards of compound interest. In practice, it gets slightly more complicated. The inflation rate in the US is around 2 to 3%, which means if you don't want the real value of your investment to decrease every single year by 2 or 3%, you should not withdraw more than 7% of your investments. On top of it, if you want your investment to grow by at least a small margin, like 2%, you're left with just 5%. So, if you want to be able to withdraw $87,000 every single year and be confident that inflation won't wipe away your wealth over time, you have to invest double that amount, or $1.7 million, or $2,000 every single year instead of $1,000, which is still reasonable for most people. If you check out the FIRE community on the internet, you will find out endless examples of people lived frugally for 5, 10 or 15 years and saved the vast majority of their earnings, but eventually became financially independent. You don't have to go that extreme because life without work is boring, so you can pursue this strategy as a backup plan in case if things go south. But you probably have a million questions about how is that possible. I get it. I was once in your position, and to answer all of your questions, I have created a course that's simple, straightforward, and fully animated. I've literally answered almost all of the questions you have in your mind. I strongly recommend it if you're serious about investing. It will not just teach you how to invest in index funds, but teach you also how to analyze stocks, how to read financial statements, and at the end of the course, you will have to complete an assignment that I will personally check. And the best part of it is that you can get 2 weeks of Skillshare Premium if you use the link in the description and get the course for free, so don't miss it. But what you also have to keep in mind is that you should not do anything with your money unless you have covered your credit card debts first. If your credit card has an annual percentage rate of, let's say, 20%, that doesn't mean you get charged 20% interest once a year, depending on how you manage your account. That's because interest is calculated on a daily basis, not annually, and it's charged only if you carry debt from month to month. So it doesn't make sense to aim for a 10% rate of return while you have a debt with a 20% interest. Nearly 40% of Americans can't even last a month on savings. That's a horrible statistics because that means almost half of Americans are living paycheck to paycheck. If 2020 has taught us something, then it's that nothing is guaranteed. You can plan as much as you want, but then something that's entirely out of your control can ruin everything and can even cost you your job. People have spent years building businesses but had to close their doors forever due to the lockdown. But crises aren't always bad. They shake things up and provide an opportunity for everyone to climb to the top in a relatively short time. Think about the number of people who earned a fortune due to the crypto boom. The United States also added 2.2 new millionaires from 2019 to 2020 alone, which puts it at the very top of the list of countries with the most of millionaires. If you are not one of them, then don't worry because such opportunities come every 5 to 10 years, but you have to be ready for them. In fact, you don't even need such an opportunity to become financially free. In the 21st century, we have so many financial tools that almost anyone can become financially free if they invest early and wisely. And one of them is dividend investing. In 2018, Warren Buffett earned $3.8 billion in dividends. Don't get me wrong, he did not sell his shares, but rather the companies he has invested in paid him that much money. But why? How do dividends work? What kind of stock should you buy to get the highest dividends possible? Are dividend stocks better than rental income? And how to invest in dividend stocks to be able to quit your job? We'll answer all of these questions and many more. But before we do that, make sure to give this video a thumbs up that it deserves, and here is a little disclaimer. This is not financial advice, and everything that's said in this video is for educational and entertainment purposes. And now, let's dive in. Many of you believe that rental income is the best type of passive income, and it's really difficult to disagree with that because the property often keeps rising in value and the rental income is often big enough to cover your needs and wants. Worst case scenario, you can literally live in that house if you don't find a tenant, but the demand for shelter will always be there. Even during the pandemic, when everyone thought that it could greatly damage real estate prices, the exact opposite has happened, where house prices rose by almost 17%. However, managing real estate is not as easy as many people believe. I've been in real estate for years, and it takes a lot of time to keep your rental income coming, which means it's not as easy as many of you might believe. That's what makes dividends so appealing, because dividends are the real passive income. Often, you don't have to do anything once you find the right company to invest in. But what are the dividends in the first place? You see, companies take time to mature and grow up. In the beginning, they need investments to hire people, rent a place, but once they start making a profit, they share that profit with the owners of the company. So, when you buy a stock, the company is obligated to share that profit with you. That is called a dividend. But not all companies pay dividends, especially tech companies. They would rather reinvest that money back into the business to grow faster. But stable companies that don't have much room left to grow usually share that profit with their shareholders like Coca-Cola, McDonald's, Johnson & Johnson, and so on. But companies like Amazon have a lot of competition, so they never pay a profit, but instead benefit their shareholders by keeping their stock price rising. In order to find out how much dividends does a company pays, just Google the stock price of that company and pay attention to the dividend yield. In this case, Apple pays 0.62% for each stock. In other words, Apple pays 88 cents for each stock you own. That's a lot of money. But if you own enough stocks, that could turn into a substantial amount. But you also have to consider that since the beginning of the pandemic, the Fed lowered interest rates and started buying corporate bonds. So stock prices rose dramatically. Some of them doubled within a year, but their dividends still remained the same, which lowered their dividend yield. Prior to the pandemic, Apple, for example, used to pay 2.5% in dividend yields, which means for every $1,000 you invest in Apple, you would receive $2.5. Still, that number doesn't seem as high as you can get in real estate, but you also have to consider that when you invest in dividend stocks, you also benefit from the rise of the stock. In the last 10 years, Apple wasn't just paying dividends, but the price of the stock rose by 1,156%, way more than real estate investors can even dream. But we also have companies that are so-called the king of dividends. There is an elite list of 31 companies that have the longest history of doing so. These are companies that endured through financial storms and difficult markets while still finding a way to increase their dividends each year. There are companies that investors can rely on, such as Johnson & Johnson. For 59 years, it has kept raising its dividends. As of this year, it pays 2.54% in dividends, which is $4.24 a year, which means if you own $100,000 worth of Johnson & Johnson stocks, you will receive a dividend payment of $2,540 every single year. Of course, on top of that, you will gain from the rise of the stock price. My other favorite dividend stocks are Coca-Cola, that pays over 3% in dividends. It's a well-established company that doesn't seem to shrink in the next few decades. Do you really believe that in the coming future, people will stop drinking cola? I don't think so. That's why for 59 years in a row, it kept increasing its dividend payment. Other notable companies are Lowe's, Procter & Gamble, Universal Corporation. I will leave a link to the list of these companies for those who are interested. But the main question is, how much money should you invest to live off dividends and retire? Before we answer that question, we have to figure out how much do you spend per year. $40,000, $50,000, $60,000. That number is going to be different for everyone, but let's take $50,000. In order to make $50,000 a year, you should buy $2 million worth of dividend stocks if we take an average of 2.5% dividend yield. Of course, there are dividend stocks that pay way better, but they're riskier. With King of Dividends, you can sleep calmly because these companies are so big and well established that even 10 years from now, they will probably be bigger and pay more dividends. While when it comes to smaller companies that pay 6 or 7%, they could plummet. In fact, one way companies attract investors when they're doing terrible financially is by paying high dividends. You will get a higher dividend yield, but as the stock price keeps falling, you will lose on the other side. So never invest in a company just because it pays a higher dividend yield. And never invest in just one company regardless of how stable the company is, because like any other company, it could go bankrupt. Of course, the idea of Coca-Cola going bankrupt seems impossible because it has been around since the 19th century, but everything is possible, so never put all of your eggs in just one basket. Of course, you can get a higher yield if you invest in real estate, such as 5, 7 or even 10% if you find a good deal in the market. But in order to get into real estate, you need a lot of money. Even if you are taking a mortgage, you need to make the down payment first. Then you have to spend weeks, if not months, to find a good deal in the market. And even assuming that you get all of that right, real estate needs a certain level of management. Finding a tenant, something always breaks down, so you have to fix it and so on. But when it comes to dividends, there are well-known dividend stocks that you can invest in without all of that hassle. But with dividend stocks, you can start with as little as $100. On top of that, if you want to liquidate your stocks, then it's much easier than selling a house. I'm not a really big fan of dividend stocks because you could make way more by investing in growth stocks than you could possibly make from dividend stocks. In the last 10 years, Amazon stock rose by 2,500%, Facebook grew by 780% since 2012, Microsoft grew by almost 900%, Netflix grew by 3,000%. If you put the effort to find 1 or 2 great tech stocks, you can make way more than you could possibly make from dividend stocks. And once you have built some wealth, you can invest part of that income to create passive income. How much would you have made if you have invested just $100,000 in Google back when it was just getting started? That's exactly what David Carradine did. And today, his net worth is over $6 billion. That's probably one of the best investments ever. However, not everyone gets such a chance to become a billionaire. Not everyone has an extra $100,000 to throw it at another startup. Nonetheless, there are endless number of opportunities all around. In fact, 1,700 people just here in the US are becoming millionaires every single day. And if you want to be one of them, you gotta start somewhere. But here is the problem. 40% of Americans can't even cover an unexpected $1,000 bill because they're just living paycheck to paycheck. So most people can't even pull out $1,000 to invest. But $100? Easy, almost everyone can afford that. However, it seems like you can't do much with it, since even, for example, a single Apple stock costs twice that amount. And I'm not even talking about Amazon or Google. Even index funds are not an option. How much do you think $100 over 40 years with 8% returns would amount? Just a little over $2,100. But don't worry, because there are actually legit great ways to invest even as little as $100 that I have used, and I will share them with you here in this video. So let's start with the first one. Start a business. I know that it sounds cliche because to start a business, it seems like you clearly need much more than $100. But believe it or not, there are actually a handful number of businesses you can start with as little as $100. The problem is that when we think of starting a business, we imagine big businesses and ignore all the ones that are much easier to start. You can buy a lawnmower, for example, for $100 and start a side business cutting your neighbor's grass. In fact, I started this channel with just $100. I'm not one of those guys who started watching YouTube since its early days, but much later. And then I realized that most of these YouTubers just share their ideas and experiences. Even the most successful ones started with almost nothing. So I said to myself, I have a lot of ideas too. How about I start sharing them with the world? Let's see how that goes. I ordered a Blue Yeti microphone for a little over $100 and started making videos. I have to admit, they were absolutely horrible because I knew almost nothing about video editing or animations, and I didn't really care much because it was more like a hobby than a real business. But then I slowly started improving the quality and somehow it started picking up. So I had to hire animators and now it's like a little business. You don't necessarily have to start a YouTube channel. There are endless number of online businesses that do not require a lot of capital. Let's say you're good at playing a guitar or violin. You can find someone who can help you with shooting it and editing it for as little as $100, and then turn it into an online course and start selling it. And the great part about it is that you don't even need a website because right now there are multiple great platforms to sell courses for free. And if it turns out to be successful, you can slowly turn it into a legitimate business. You can easily earn back your money and make much more. We are lucky to be living in this age because no matter where you are in the world, pretty much everyone has internet. So this is probably one of the best options for everyone. Number 2. Trade some stocks. A lot of people keep watching videos or read about the stock market, hoping to start investing one day. If you haven't bought a single stock, the world of the stock market is quite ambiguous to you. When you actually get in and start, a lot of things start getting clear. Reading and watching videos about the stock market is one thing, and investing or trading is something else. What seems so obvious in theory isn't really that easy in practice. When you buy a stock and it goes down right in front of your eyes, you get emotional. Your brain stops working and your emotions get in charge. All that will be in your mind is to minimize losses. That's when you really learn. The point isn't to turn that $100 into 1,000, but to experience the market. But when you're trading with real money, you will be much more careful and cautious since your money is at stake. It's actually fun to look for the right company to throw your money in. You will read about different companies, analyze their financial statements, figure out if their price is undervalued or overvalued, and then make up your mind if this company worth your money or not. This experience totally worth it even if you lose $100. In fact, if you decide to invest a larger amount one day, you will at least know how the market works. Thirdly, invest in books. I grew up watching my parents live paycheck to paycheck and struggle financially, and I promised myself that when I grow up, I'm not gonna live like that. But the problem was that I didn't know how to do that. My parents told me that if I keep getting good grades, I'll find a good job when I grow up and I won't have to worry about money. But at some point, I started reading books outside the school and accidentally came across Rich Dad and Poor Dad by Robert Kiyosaki. And that's where the magic happened. I was introduced to the world of money, and to be honest, I was shocked about how little I knew about money, even though that I use it every single day. You probably have heard this millions of times, but the moment you make that shift in your mentality, your perspective changes and you will start making different decisions that will slowly lead you to financial independence. A lot of people watch a video or two here on YouTube and then they think that they're financial gurus. Let me ask you something. How many videos you have watched for the past week? Dozens if not hundreds. Because YouTube is entertainment. You might learn a thing or two, but it's not gonna stick like when you read a book, because usually it takes you a couple of days if not weeks to finish a single book, and by then these ideas will be embodied in you. Some of my favorite books on this matter are The Millionaire Fastlane, Secrets of the Millionaire Mind, Rich Dad, Poor Dad, and few others. I'll just put them in the description. Number 4. Buy and sell something. A lot of people do not even have the basic business experience. They're so drained into the system where they haven't even made a single penny outside their job. So when you tell them to start a business, they keep postponing it because it's a strange world for them. But business is all about selling, and most businesses do not even build their products, but rather just buy low and sell high. The grocery store beside your house, for example, they do not produce what they sell, they have a supplier. The process of business is simpler than you think, but quite difficult to implement. The good news is that you don't have to spend big and open your store to learn that. You can just go to eBay and find something that you can resell to your neighbors, for example, for a slightly higher price. That experience will improve your social skills, analytical skills, and negotiating skills. You might not make a lot of money by buying and selling with just $100. However, you will learn much more than you will do with a 4-year degree in business. That will probably cost you $100,000. You will have to analyze the market. Who would be your potential consumers? What would be the appropriate price? How to deal with your clients, and on and on. In fact, there are actually people who make a living out of this. But if you think that's not for you, here is another idea. Learn a valuable skill. What you could also do is that with that $100 is learn a valuable skill that can earn you much more later on. This is probably the best option if you're struggling financially or looking for a side hustle. You can invest it in a social media course. Every business is now looking for someone who actually understands how these algorithms work. Or you can learn graphic designing, copywriting, web designing. There are endless number of online opportunities. Of course, you can find free materials, even here on YouTube. So why buy a course? Usually, the free stuff isn't as good as paid courses. They're better organized, and after taking the entire course, you feel like you actually learned the skill. Compared to the free stuff where you have to keep searching for everything separately. And secondly, once you pay for something, you feel obligated to take that course because you just spent $100. In fact, it will probably motivate you to take action after taking the course to earn back that money that you have spent on the course. $100 isn't a lot of money and you can't do much with it. So all the options we discussed in this video are more about educating yourself, stepping up your business and analytical skills, and getting valuable experience that will pay back in the long run. What are the most profitable businesses you can start right now? Businesses that do not require a lot of capital. Of course, if you have $1 million in your bank account, you have a lot of options. But what if you don't? What if you have just a few $1,000s or a few $100s? What should you do? Can you start a profitable business with as little as a few $100s? How much can you earn from such a business? We will answer all of these questions and many more. So give this video a thumbs up and let's start with the first one. Number 1. Digital marketing. Before you turn off this video, please hear me out. I'm going to explain to you how you literally can make millions of dollars by starting a tiny small digital marketing business. Don't worry, I'm not gonna sell you any course. I have friends who actually run such businesses, and before writing this script, I've talked to them just to make sure that I'm presenting to you with the most accurate information possible. Here's how it works. What is the one thing that every business in the world wants? Sales. If you can help any business to increase their sales, they're willing to pay. The higher the sales, the more they're willing to pay. And it doesn't matter what business is that. That's why businesses spend a lot of money on marketing, branding, building nice stores to attract customers, and so on. But most, especially small businesses, do not have the resources to have an entire digital marketing team. And here's where you come into the picture. Let's say it's a corner shop that sells glasses. Their clients are the people who live around that place or accidentally bumped into their websites when googling glasses. However, if more people knew about their products, they could double, triple, or even grow their sales by over 10 times. Of course, anyone can put ads on Facebook, YouTube, or AdSense, but not everyone could put effective ads that turn into sales. And that's what you have to learn to do. It's not easy. It's going to take you some time to master the skill. You might need to spend a few $100s testing different strategies until you learn what works and what doesn't. You can literally go to any business owner and tell him, here is how I'm going to increase your sales by 30%, for example. But I will take 1/3 of the profits of all the sales that I drive. Any business owner would gladly work with you. To prove that you can put effective ads, you can give them a free trial. Of course, that business owner can learn to do that by him or herself. But when you have an entire business to run, you don't have the time for such things. It's much cheaper to just hire someone who is good at that. It doesn't matter what's going to be the social media of tomorrow. The foundation of this business is going to stay. Number 2, crypto businesses. The crypto world is filled with scams. I get emails every single day to promote crypto products that look very, very suspicious, to say the least. But because I love you and respect you, I would never promote anything that I wouldn't personally use. However, that doesn't mean there is any opportunity in this field. I believe that blockchain is at that stage right now as the internet was after the dot-com crash. 10 years from now, most people will look back and say that, I wish I started the business in this field. Once this technology is widely adopted, it will be too late to create something really huge. Even if you started a simple e-commerce website 15 years ago, you could be making millions of dollars easily today. But what kind of businesses you can start with blockchain? Let's take an example of healthcare. One of the biggest problems in the healthcare industry is storing patient information. Doctors usually need your medical history to be able to diagnose your health accurately, but also patients' health details, identity details, and existence of fake medicines in the supply chain. If you use blockchain to store all that information, no one will have access to the patient's medical history without the permission of the patient. Even if you end up visiting another doctor in a different country, you can give that doctor access to your medical history. Blockchain can also avoid fake drugs in the market, since each drug could be safely tracked once it's stored in blockchain. It will make it easier and faster to trace the origins of that drug. Store them safely, reduce the cost, and make the entire system much more effective. There are already a lot of startups in this field, but it's not widely adopted yet. Now is the best time to start a business in this field. Healthcare and financial industry are only 2 out of many industries where blockchain could be used. You do not need a lot of money in the beginning, since most people don't understand how the system works in the first place. Spending some time just to understand how it works will already give you a competitive advantage over others. Number 3. Online tutoring. For the last 20 years, everyone was talking about how worthless are college degrees, but most people didn't care much. But after a global pandemic, no one wants to pay these astronomical tuition fees while getting educated online. Whether we like it or not, the process to move to online education has begun, and this trend is only going to grow this year. But you know what most people don't like about online education? You don't feel the connection with the teacher. That makes the process a little ineffective. I mean, it's great when you are trying to reach a huge number of people, but on a personal level, most people want to feel that personal connection, which is why online tutoring is on the rise. In the past, it was a bit difficult since the tutor had to come to your place, but since online tutoring is getting widely accepted, you can easily make a lot of money as long as you're good in one field. Are you good at math, chemistry, science? There are millions of parents who will pay if you help their kids to learn faster. It's a little difficult to scale this business unless you create a platform or hire other tutors and start offering tutoring services on different subjects. But it's a perfect option if you don't have a lot of resources. Number 4. Start a fitness and wellness blog. This is one of the businesses that I personally want to start, but I can't find the time to do so since I'm busy running my other businesses. With the rise of global pandemic, people are paying much bigger attention to their health and turning to Instagram bloggers who talk about fitness and health. I personally invest a lot of my health by working out at least 3 times a week, making sure that my diet is as healthy as possible, and jogging every single morning. Maybe one day I will be making fitness videos on YouTube to share with you how I work out. This industry is growing so fast that even Apple launched dedicated fitness apps. When Apple gets into an industry, it gets serious. You don't have to work out for a few years before you can get into this business. Start your journey of getting into shape and share it with the world. People love following people with whom they can relate. If you end up inspiring others to start working out or taking care of their health, they will forever be grateful and watch everything you post. Then you can monetize this mass audience. Number 5. Trade in Amazon. Let me ask you a simple question. What is the purpose of any business? Sales, right? Any business exists to sell a particular product or service. Some companies produce their products, while others, like that corner shop beside your house, has a supplier. The job of that shop is to sell. In fact, the job of any business is just to sell. And Amazon is a platform where you can sell pretty much anything you want. In fact, you don't even have to manage your inventory. It's all taken care by Amazon. But how do I know what to sell on Amazon? Have you ever heard of Alibaba? It's like Amazon, but in China. Most of the products are often sold for a fraction of what they usually cost in the United States. You can find there anything from gadgets to accessories to clothes to everything else. Your job is to buy low and sell high. It's not easy because you don't know what is in demand, but after some market research, you can figure that out. That's what every business does. They study the market and try to come up with a product that's in demand. It's time consuming. You will have to spend an endless number of hours to find the right product at the right price. That's how people make fortunes with Amazon. It's not easy as it was in the past, since every single year the competition gets stronger, but there are still plenty of opportunities. All of the businesses we have discussed are practical. You don't have to be a genius or have millions of dollars to start. But you need the discipline and dedication to push yourself every single day to make it happen. Don't try them all at the same time. You will definitely fail. Choose one of them and give it your best. Even if you have a full-time job, start by spending a few hours after your job. Once you grow the business to the point where it could pay the bills, you can decide to quit your job if you want and further grow the business. Who is the fastest self-made billionaire ever? While it took Warren Buffett 55 years to join the Billionaires Club, Jay Walker literally did it in less than a year. He launched Priceline.com during the dot-com bubble, and his net worth instantly jumped from zero to billions. But that wasn't sustainable because when the bubble burst, his net worth crashed as well, while Buffett is still on the top of the list, and he doesn't seem to go anywhere anytime soon. And that's the kind of wealth you want to build. The game of money isn't easy. It's tough, competitive, and ruthless. And if you don't know the rules, you are doomed to fail. The problem with most people is that they might work super hard their entire lives, but end up poor at the end of the journey because they don't know how to let their money make even more money. In other words, they don't know how to invest. Let's assume that you have been saving money and have an extra $1,000 in your bank account. That is already an achievement because nearly 70% of Americans don't even have an extra $1,000. So instead of spending it on another useless gadget or a pair of shoes that you will wear once and then keep in your wardrobe for many years before you finally throw it away, let's assume that you're going to invest that money. But the question is, how do you invest your first $1,000? Do you invest it in real estate or the stock market? What kind of stocks do you buy? Is $1,000 enough to start investing? We're going to answer all of these questions and many more. So give this video a thumbs up and let's get started. To understand what investing is and how does it works, consider this example. Let's say you worked so hard and saved $300,000. You can pay a visit to a Ferrari store and get yourself a luxurious car and let everyone know how successful are you. Or you can buy real estate and rent it out. Every month you will receive at least $2,000. If you decide that you no longer want to keep receiving the $2,000 paycheck every month, you can sell it and get back your initial investment. In fact, the value of your investment might even appreciate, so you will sell it for a higher price. And that's how money makes money. But you can't buy real estate for $1,000. That's not even enough for a down payment. However, that doesn't mean you can't invest that $1,000 elsewhere and let it grow. The easiest way is just to deposit it into a savings account and generate interest. But why would the bank pay you for keeping your money in the bank? Shouldn't they charge you instead? No. You see, the bank is going to take your money and loan it to someone else at a higher rate and would share with you a portion of that profit. That's how banks work in short. The only problem with this strategy is that interest on deposits account is so low that it doesn't worth it. The highest rate you probably can get is 0.8%, which means that if you invest $1,000 into a savings account, 12 months from now, you will receive an extra $8, which is extremely low because the Fed targets an inflation rate of 2 to 3%, which means if you're not getting at least 2 or 3%, over time, the real value of your $1,000 will depreciate, which means you can buy with it less goods every year. But why interest rates are so low on deposits account? Because interest rates in general are low this year, since the pandemic forced the Fed to lower them to encourage everyone to borrow money and spend. A year or two from now, once we get out of this recession, the Fed will increase interest rates to 1 or 2 or even 3%, which means interest rates on savings accounts will rise as well. Your second option is to buy government bonds. A government bond is a security that's issued by the government to raise money to support government spending. Say the government wants to build a school, but it doesn't have the money to do that, so it issues an IOU, a piece of paper that says whoever owns this security is owed this much of money plus interest by the US government. Of course, this is an oversimplified example, but that's the point in short. Government bonds are heavily influenced by interest rates. So, since interest rates are extremely low this year, government bond rates are less than 1%. But 2 years ago, when interest rates were high, government bonds rates were as high as 3%, which is not bad since the government bonds are the safest investment you can ever make. Any investment carries with it a certain level of risk. If you're loaning money to the US government, what are the chances that the US government will default on its loan? For the US government to go bankrupt, the entire US economy might have to fail. That's why US government bonds are considered the safest investment in the world. But if you want to make a higher return, let's say 10, 20 or 30%, then you have to consider investing in the stock market. For example, Amazon's stock price increased by over 80% just this year. Google's stock price rose by almost 30%. Tesla's stock increased by 721%. Yes, you heard that right, 721%. Then the question is, why would anyone invest elsewhere when they can double or even triple their money in the stock market? The answer is risk. When it comes to government bonds, for example, there isn't much risk. In fact, it's risk-free to a certain extent. But when it comes to individual companies, there is a risk that the company might fail. It might report negative earnings. Pretty much any negative news can drive the stock price down. The company might release a product, and if the public doesn't like it, that can make some negative headlines, which can drive the price down. So, with higher returns comes more risk. Apple is a well-established company, and its chances to fail are way lower than Tesla, for example. But it also has less room to grow than Tesla. That's why Tesla grew by 721% this year, but Apple by just 70%. What you have to determine for yourself is how much risk you can take without going nuts. If that $1,000 is all that you have left, maybe risking it all isn't the wisest option, because if things turn south, you can end up losing most of it. So one way investors minimize the risk in the stock market is by investing in an index. The most famous one is the S&P 500, which tracks top 500 US companies. So an index fund would basically invest in these top 500 US companies. Some of these companies will definitely fail, but others will grow. Judging by historical data, the average return rate for the S&P 500 since the 1920s was around 10%. This means buying a share of these index funds means you're buying a tiny share in the top 500 US companies. My three top favorite index funds are VOO or Vanguard 500 Index Fund, Triple Q, an index fund by Invesco, and Fidelity Zero Total Market Index Fund. All of them are great and invest in pretty much the exact same companies. But how do you buy shares in these index funds? I mean, where do you start? First, you need to find a broker, someone who is qualified to sell you stocks. In the past, it was always someone. You had to pick your phone and call him and ask him to sell you some shares. Remember the Wolf of Wall Street? He would spend his entire day calling people and try to sell them worthless stocks. But thank God we are in 2020 and things are much better and easier. Brokerage firms created apps so that you can buy shares from the comfort of your smartphone, such as Robinhood, Webull, and so on. All you have to do is that download one of these apps and sign up, and you can start investing right away. In fact, if you use the link below to open a Webull account, you will get 2 free stocks. Just a disclaimer, it's an affiliate link, but you're going to get your 2 free stocks. Isn't that amazing? That's a good way to start, I would say. Check the link in the description. I tried my best to make this video as simple as possible so that whoever wants to start investing can start right away. Often what happens is that you want to start investing, but you have a million questions and you start googling this and that and get exhausted after some time, and then you just give up and try again a few months later maybe. So I try to answer all of your questions here in this short video.